Hi everyone and welcome to my morning report analysis videos on Wednesday the 30th of January with me, Richard Perry, market analyst at Hantec Markets. We've got a fairly settled market today, nothing too decisive in terms of direction, still some chop around on sterling really, being the only major mover that we've got. Okay, aside from the Aussie dollar, which has jumped on a bit of inflation data, but sterling has been flying around on Brexit-related news. We had all these amendment motions in Parliament debated and voted on last night, and it seems as though that Theresa May is now going to be able to go back to the EU with at least something to try and renegotiate the backstop and get a deal that from the EU that maybe could get through Parliament. The rest of the markets are really focusing on a couple of things really. We've got the US-China trade negotiations, which have started 2 days of talks between higher ranking officials today, and also we're looking out for the Fed meeting tonight. But this is an interesting chart where we've seen in the last few weeks really that the dollar has started to sort of weaken against the Chinese yuan, and the yuan breaking out to 6-month highs really with that move this morning. That sort of reflects the I think the attitude of the market that's suggesting that they're sort of moving towards more of a deal scenario or an agreement scenario between the US and China. You sort of add into that, you've got the Fed, which is turning a little bit more dovish, and that is again sort of going to be an aspect that the dollar index will be focusing on. The Fed meeting tonight. Don't expect any rate moves, but you could start to see a bit of a pause or an indication on pausing rate hikes, perhaps in the March meeting. And that would be the important thing to look out for. Also look out for possible changes to how the Fed runs its balance sheet reduction program. So a couple of things there. Now in terms of how general markets have moved, well, yields have basically not gone anywhere, and hence why the dollar index has sort of basically flattened off a little bit, but there are some key markets that are breaking out. You see gold moving above 1310, which I think is a key level. Silver above 1587, two key breakout there points. Those are the two interesting markets I think we've got today that are sort of holding their moves. You've got the S&P, which has sort of dropped back a little bit again, sort of reflecting the consolidation we've got on yields, and it's not really sort of waiting for the outcome, I think, of the US-China negotiations there on the Treasury, on the S&P 500. So in terms of data points today, we've actually got a fairly large amount of data showing you, first of all, Eurozone economic sentiment. Now, that comes at 10 o'clock today, and sentiment is expected to drop back again to 106.8, so continuing this decline in Eurozone economic sentiment, not great there. We're also looking out for German inflation data this afternoon, expected to come out at at 1 o'clock with a little slip back to 1.6% on the headline. That would again suggest that we're going to get some decline on the Eurozone data. We've also got ADP employment 115, 178, down from 271. Watch out for that. We're also then looking at the EIA inventories. Don't follow these ones. I don't know why that's come through, but the expectations are at 3 million barrels for crude, distillates at minus 1.5 million of drawdown, and gasoline building again. Look at the crude stocks surprisingly building 8 million barrels last week. That's not going to be especially good for the health of that oil rally that we've seen. That continues to build. And obviously we're looking out for the Fed at 7 o'clock tonight. In terms of the chart of the day, silver, the breakout on silver above 1587 is a key move. We've seen this market sort of forming this uptrend in the last few weeks, holding that uptrend and breaking high. You've got the momentum indicators strongly configured on the RSI, MACD lines crossing higher this morning, or on the brink of a cross higher. Stochastics also into strong configuration, so holding a breakout above 1587 is key, because that's a 6-month high on silver. That opens 1621 as the next sort of mini resistance, I suppose you could call it. But beyond that, you're looking at 1735, that those key 2018 or mid 2018 highs. So that would continue certainly this recovery that we've got. I mean, I suppose you could even argue that silver is breaking through what is ultimately a sort of a pivot band of resistance between sort of 1555, 1585. Breaking through that improves the outlook considerably, and really does sort of set the market on its way towards sort of buying into weakness and further gains in due course. It's sort of similar to my gold outlook that I've got through this year, where I expect to see gold gains. I expect to also see silver gaining. So I wish you good luck in your trading today, and I will speak to you again later.